Hey guys, how's it going? I basically want to put out a video for any of our customers that are holding US dollars right now. Let's say you've raised capital, you have a bunch of USD you're sitting on, or maybe you're making a ton of US dollar revenue and you don't have to exchange it back to Canadian just yet, or want to avoid it as much as possible. Well, I'm here to help you understand price movements using technical analysis to better time the market so that you can exit your US dollars at a higher amount. So you're basically selling for higher and you can keep more of that cash in your pocket. So just to give you a little bit of a background about myself, I've been a trader in the stock market since 2008. I quickly started learning technical patterns, how to trade stocks, looking at macroeconomic news, how it reacts to markets, trading commodities and currencies as well. And so I've been around in this industry for quite some time now, and I've kind of have a basic understanding of how everything operates actually in practice. So actually getting it down and dirty and actually getting transactions done and feeling emotions of the market. So I just want to kind of give you guys a high level perspective of, potentially how you can do better when you're exchanging US dollars back to Canadian. And even, I guess, technically, if you can time your payments, better times to exchange your Canadian to US dollars if you need to pay international suppliers and things of that nature. So you're looking at a chart here, a long-term price chart for the US dollar to Canadian dollar. And this is basically the exchange rate and how it moves. Now, exchange rate is just a fancy way to say the price of US dollars, essentially, when you're talking conversion to Canadian. So just think of it as a price. So as you can see, this is since 2003 all the way up to 2007, so a very long-term chart. But what I want to show is that we had some really strong support levels at the bottom here. So support levels are where prices will bounce off of because the market believes that those are good prices to enter into the market. So I had a couple big bounces here, and then as you can see, we're starting to trend up in an upward market. This is always a good sign if you're holding US dollars because having an upward market gives you the advantage because the probability of the price continuing to go higher is much better. So it's in your favor. So you can see there's a pretty steep incline right now. So it's what's called a bullish market. And in a bull market, prices are going up. So this is a monthly chart, but I want to go to the weekly to give you a little bit more perspective as well. And basically, you can see here there's a very strong market, upward market as well. There's a great incline here, which I'm very excited about. And there's a resistance level here that's flat. So this is always a good sign because what's happening here is you have support levels that are constantly increasing, bouncing off the bottom and continuing to climb higher. So you have higher lows, and then the highs are at a stagnant right now. So every time it hits this resistance level or the top band, we're having a lot of sellers at that point that's kind of keeping it down. But as this keeps trending up, what happens is you have more momentum going in that direction, and what you're looking for is for a breakout above this line. And when you get a breakout, that's when the price of US dollars can continue to climb even further. So just looking in this chart, and actually I'm going to show you on the daily because it gives you a little bit better of an idea of what I mean. So I'm going to just I'm going to pop and put this here on the chart. So if I show the support levels that are inclining, and I'll kind of move that even further, and then you have the resistance level that's a bit flat. So basically, with your US dollars, you're going to want to try and sell your US dollars when it's closer to the resistance band of that range. So whether you have, let's say, $1 million you're sitting on and you want to do it in 100,000 increments, because nobody times the market perfectly, and that will help alleviate some of the risk. What you can do is offload, 100,000 or 50,000, whatever you want to do at times towards the top level of the range, and that'll give you a better overall price that you exit the market from. And then when it's coming towards the bottom, that's when you can maybe, if you can, time your payments where you have to exchange Canadian back to US in order to make payments. That would be a better time to do it off this bottom. But as you can see, in this area here, you're pretty much gray area. So once traders start to push it further down to bounce off this support level or push it up to hit on the resistance level, those are the times that you want to exit the market. So I just wanted to give you a high level overview of technical analysis, how price movements work. Of course, economic news comes out and pushes it either way, but ultimately traders deal with technicals, and that's what forces short-term price movements. So that's what you guys want to really pay attention to. And what I'm going to do is every single week, I'm going to kind of give you quick updates on where the rates are. And if it is a good time to sell your US dollars, I'll make sure to message you to see if you can get out at a better time. Of course, my company helps a little bit on the spread as well. So the cost going through a bank is a bit higher. We alleviate that as well, but this is going to help you guys much more get more value for your US dollars. If you have any questions, feel free to email me back. give me a call, meet me on the fifth floor at the DMZ. Love to have a chat. Thanks, guys.